All right, let's dive right in. Today, we are breaking down a really powerful trading blueprint for the Nifty 50, all based on Aaara's latest analysis. We're going to look at a super clear, two-sided plan so you're ready for whatever the market throws at us next. Let's get to it. And we're kicking things off with a pretty bold statement from the source. We did what we said. This really sets the stage because the entire strategy we're about to unpack is built on the back of a prediction that just played out perfectly. So, before we jump into what's next, let's take a quick look back at what just happened. Trust me, this is absolutely crucial for understanding why the current position is what it is. Now, the precision here is, wow. It's just truly impressive. The analysis pinpointed 25,400 as a major level to watch. The market dipped down to 25,372. Incredibly close. And then, just like they said it would, it pulled off a perfect U-turn. That was the signal, right there, to switch from a put to a 25,400 call. And just so we're all on the same page, a call is basically your bet that the market's going to go up. And guess what? That call position is now sitting nicely in profit. Okay, so that brings us to the here and now. Let's get a crystal clear snapshot of where things are standing, because this is our starting line for the entire plan going forward. So here's the lay of the land. The market's currently at 25,682. The live position is that 25,400 call option, which was entered somewhere between 108 and 121. And this is super important. There's a trailing stop loss set at 100. That's just smart trading. It's all about protecting those profits. Okay, so what happens if this bullish energy just keeps on rolling? Well, that leads us straight to Plan A, which the source calls the rocket continues. I love that. This is our upside scenario. And this is the magic number for Plan A. Now, you got to understand, this isn't just some random number pulled out of thin air. It's a huge technical level, a point of resistance. The thinking is, if the market can punch through 25,773, that's the signal that the rocket has really taken off, and we could be heading for some much higher targets. So once we break that 25,773 level, the journey really begins. The first stop is 25,793, and we need to be a little cautious there. If we get past that, the next targets on the map are 25,901 and then 25,981. We might see a little pullback, a little retracement around 26,037 before a potential final blast-off towards those ultimate targets of 26,146 and 26,170. It's a step-by-step climb. But, and this is a big but, what if the rocket sputters? This is where the strategy gets really, really smart. Plan B is what's called the reversal alert. And the source makes it clear. This part is extremely important for locking in the profits we already have on the table. The plan is to be on high alert for any signs of failure, what traders call rejection, at 3 key spots. So if the market hits that first target of 25,793 and then immediately falls back, or if it can't even get through the entry level of 25,773, or if it breaks down below 25,620, all of these are massive warning signs that the upward momentum is fizzling out. And if any of those red flags pop up, the action plan is incredibly clear and disciplined. Step 1, you get out of that profitable call position. Period. Bank the money. Step 2, you immediately pivot and flip to the other side of the trade by entering a put position, something like the 25,700 PE. It's a clean, decisive switch, no hesitation. And this just illustrates the logic behind it so perfectly. The source uses this fantastic analogy. If it can't go up, the lift will break and fall down. Think about that. It perfectly captures what a market reversal feels like. When all that upward energy fails at a key point, the drop can be incredibly fast and sharp. So you see, everything we've talked about, Plan A, the rocket ship, and Plan B, the reversal, it all comes down to one single critical number. Let's put that number back on the screen, 25,773. This is the hero of our story. It's the pivot point. The market's reaction right at this level is the trigger. It's what tells us whether we're launching Plan A or executing Plan B. This slide just sums it all up beautifully, doesn't it? It's a simple fork in the road. If the market smashes through 25,773, Plan A is a go, and it's a potential joyride all the way up to 26,146. But if the market gets rejected at or near this level, then Plan B is confirmed. It's time to pull the trigger on that reversal, exit the call, enter the put. It's simple, it's clear, and it's actionable. So let's wrap this all up with the core philosophy, the big idea behind this entire strategy coming straight from the source. And there it is. The market can't fool us. We are ready on both sides. See, this isn't about trying to predict the future with 100% certainty. Nobody can do that. It's about having a clear, unbiased plan no matter which way the market decides to go. It's about being prepared, not just being predictive. And of course, we have to end with this very important reminder. Everything we've gone over today is based on an analysis provided for educational purposes only. All trading and investing comes with significant financial risk, so please be sure to do your own research and always consult with a professional financial advisor before you make any decisions. Thanks for tuning in.
இந்த வீடியோ உங்களுக்கு பிடிச்சிருந்ததுன்னா லைக் பண்ணுங்க, ஷேர் பண்ணுங்க, சப்ஸ்கிரைப் பண்ணுங்க. Thank you for watching.